Hello traders, this is Alexander from the Forex Authority and the FX Model software. I'm going to show you how the FX Model software performed last week in the Euro 15-minute time frame, and I'll be demonstrating it in eSignal. This software is designed for both eSignal and TradeStation, and I'll quickly go over what you're seeing on your screen here. You're seeing the green and yellow lines, which are the EMA 3 and 14 indicators, and down below you'll also see the MACD histogram, and I'll be referring to those throughout this short video. Alright traders, I want you to keep in mind that the time you're seeing in the cursor window down below here, that's Pacific Standard Time, which is my local time. So if I'm hovering over a bar and it reads 2 o'clock, keep in mind that that's 5 o'clock Eastern. This video will show you exactly what you would have seen had you been trading the FX software. The week started out on the 21st with a buy with trend, and we exited that position on a reversal dot for a total of 19 pips. And that dot was followed up with a black dot, which is a sell but no trend, and we only take those dots if it is clear, if there's clear structure or divergence occurring, and neither of those occurred on this dot, so we did not take that. And if we pan to the right and we see what set up next, the next setup, this was not a dot that was within either the US market or the London market. If you're trading outside of those day trading time frames, well, of course you would have taken that, and likely it would have been break even because it didn't move anywhere within 10 candles. The next dot that I recorded here is a buy with trend, and the same situation. Since we're in a sideways channel, this trade didn't go anywhere, and within 10 bars we would have taken a graceful exit, and that graceful exit netted -2 pips. The next trade I've got here is a breakout, and if you were in the London or US market, you would have been able to take advantage of that trade, and it was a sell, and you would have gotten out end of day, whether you're in the London time zone or the US time zone. Either way, you would have gotten out for somewhere between 68 pips and 76 pips, trailing your stops or simply just getting out at the end of day. So that was a very nice little breakout there. Performed quite nicely. So moving onwards, this particular sell with trend occurred outside of both the London and the US markets. And the next trade we had was again another sell breakout. And you can see how that occurs. It occurs once you have some market congestion. So you have market congestion, and then the system starts looking for a breakout. And in this case, it filled on a sell, breakout sell. And within 20 bars, though, the market again moved into congestion, and it did nothing within 20 bars. At the end of the 20th bar, you had another sell with trend dot appear, so you would have just stayed right in the trade, and you would have exited on the next opposite dot, and the next opposite dot was at 706. You entered at 728, so you got 22 pips out of that. And our next trend was a super dot. So we had a super dot and a sell with trend dot appearing, and we would have exited that trade on an opposite dot as well. And the opposite dot was at 673. You entered at 691, so you got 18 pips out of that. And the next one in the US time frame, US market time frame, was at 659, a sell, and you would have exited on, there was no opposite dot in this example. However, the rules do call for, if the MACD histogram crosses back over again, you exit on the open of the next bar, and that would have been an exit on a MACD crossover for minus 3 pips. And this dot right here we did not count because it occurred outside of both the London and the US time zones for day trading purposes. And the next trade that we saw signal was in the London time zone, and it was a breakout buy, and breakouts always trump any other kind of dots, so you would have continued to stay in that. Your stops are 50 pips below, so stops were down here. You never got taken out on your stop. The market came back up again, but it did not keep going. And what we saw after that was an EMA crossover. And when the EMAs cross over, you exit. So you would have exited this particular trade as they crossed over on the open of the next bar, and there was quite a gap there, so you ended up with a minus 7 pips. And to close out the week, we had a buy with no trend dot appear here. However, this did occur with structure. And if we looked left, we saw structure, support to our left, so we would have taken that trade and exited at the end of the week. We would have exited somewhere in here for somewhere between approximately 22 pips. I took it at the open of this bar right here. So for a total this week, London total 118, US total 95. And that's for trading just one lot. And depending on risk management and money management and the size of your account, that would determine what your position sizing is. So that summarizes the FX model software and how it performed in the Euro 15-minute time frame for July 21st to the 25th. On behalf of the Forex Authority, I'd like to thank you for joining us today and watching this video. And I invite you to visit our website at www.forexauthority.com for more information, or to join our free informational newsletter, or to sign up for a live demo of the software. And if you'd like to email any questions or comments, please contact us at info@forexauthority.com.